Melissa. Thank you. In the meantime, a group of former Facebook insiders are already busy at work building the next generation of Silicon Valley firms. Dave Morin joined Facebook in 2006, became one of the company's most high-profile employees when he oversaw the launch of its developer platform back in 2007 and Facebook Connect in 2008. He left Facebook in 2010 to start Path, a personal journaling mobile app and social network. Dave, good to have you with us on the program. Good morning to you.
Good morning to you.
You joined the company when they had 10 million users, far from the 900 million today. I mean, just can you put today in perspective as someone who worked there in the early days?
Yeah, I think this is a momentous day, for a variety of reasons. I think that, for everyone that's been involved with Facebook over the years, obviously, the long-term focus is sort of coming to fruition today, and I think it's a big moment and an important day for everyone that's been involved.
Yeah, I mean, obviously in the business press, we all wonder how you keep your focus with so much attention, and with the sort of structural changes that come with being a public company. Do you honestly believe they can resist that? And if so, how do they do it? How do you have that kind of discipline?
Well, I think that one of the things that Facebook benefits from is that the network itself has been sort of a fundamental changer of how communications and information flow in the world. So Mark and the executive team have spent a lot of time interacting with the public and with dealing with communications and information globally for really the last 5 years, even longer than that. And so I think that they're of any company going through this process today as well prepared as anyone.
Let's talk about Path for a moment. You had raised some funding in April, valued Path at about $250 million. You've been mentioned as a possible acquisition target for Apple, where you also once worked, or Facebook. You turned down $125 million from Google in 2011, and now we're looking at valuations for companies like Pinterest that are truly mind-blowing. Do you think we have crossed some line somewhere where these numbers are getting a little bit overheated?
No, I think that actually the opportunity on the internet is bigger than it's ever been. And you see this in even the way people are talking about Facebook and mobile today. The mobile opportunity is 4 times larger than the desktop internet ever was. And so you could actually make an argument that due to the rapid growth of the mobile ecosystem and the rapid shift to the mobile internet, that this is actually the largest technology opportunity of all time.
Right, but the assumptions that come with it, Dave, I mean, a lot of the valuations that we're looking at are based on cash flow assumptions that aren't 1 or 2 years out. They're 5 and 6 and 7 years out. You don't have a problem with that?
I think that it'll begin to happen a lot faster. I think with the shift to mobile, you'll see the development of some new business models. You already see this in the Apple ecosystem, where developers are, Apple's already paying out billions of dollars in in-app purchases and consumers paying directly for goods and premium services. And that's, those are business models that are additive on top of advertising. And so I think that you'll actually see the rapid evolution of, some newer looks at internet business models on top of the advertising world. And I think that bodes to be very promising in both the short and the long term.
Finally, Dave, before we let you go, you have the rare distinction of having worked with both Steve Jobs and Mark Zuckerberg. What's it like having one of the longest winning streaks in history?
Well, I think that what both Steve and Mark have in common is sort of a relentless focus on product and the long term. I think both Facebook and Apple have proven that if you stay focused on product for long enough and really delivering value to people in the world, that you can build really valuable company that means something to people and really truly has a deep purpose to it. So I think they're both inspirations for that reason.
Well, on a day where we're watching Facebook, we're also paying attention to alumni like you. Dave Morin of Path, thanks so much for your time, and hope to talk to you again soon.
Thank you.
All right, Carl,
Melissa, over to you.
As we await the first pricing process to pop up on this wall, let's bring in one of Facebook's underwriters, also an IPO expert. John Moriarty is co-head of technology equity capital markets with Bank of America. JD, it's great to have you with us.
Thanks very much.
In terms of where you anticipate this thing to open, what is it?
Obviously we're not going to speculate. I can't speculate on the opening trade this morning. Suffice it to say there are a number of bets back on our desk, as you've all been talking about this morning, but we're confident in how it will trade.
I'm sorry to interrupt here, but we are seeing the cross here at the NASDAQ market site. 45 looks like what is it? It is indicated to price at. It sounds about right.
Yeah, so those are the first indications that market makers have, and we'll have obviously an indication coming up here waiting for the opening cross, and this is the NASDAQ process, trying to get the totality of both the institutional and retail demand into the system and make an educated guess. Obviously, this opening trade will be significant in terms of the cost basis of new investors. And so they get the IPO distribution, they get the opening trade, and really the event for them is day one.
So I wonder about retail and institutional, because of course Bank of America, you've got both. You've got Merrill Lynch there. How did you guys go about deciding in terms of the allocation? What can you tell us from the appetite? I would assume there's plenty of Merrill brokers who want to get as much of this as they can.
Well, listen, every IPO process, we're working with an issuer to say, what are your objectives? And Facebook, like anybody else, was